stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
A refiner and a retailer top this week's list, and our strategists, Nina Mishra and Brian Hamilton, are here to fill in the blanks on each of these. So, Nina, you have the retailer. We'll go with that first. Amazon, a name everybody recognizes by now, and if they don't, they should. Their core business is online retailing, although they're diversifying, though.
Very diversified. So Amazon is one of the largest online retailers in the world, but they have so many other businesses now. Their cloud computing business has been growing very fast, and in fact they control about 33% of the global cloud computing business market now, whereas their nearest competitor, Microsoft, has about 13% share.
Wow.
And thanks to amazing growth in AWS revenues and earnings, they reported a blowout quarter. If you go to detailed estimates page, you can see the big beat here. In fact, the earnings were more than double the expectations, and that is why, you know, analysts have been raising estimates for the company. You can see that estimates for the current year have gone up by more than $3, and for the next year they have gone up by almost $4, and you see that they have been in fact beating consistently, and their average surprise, positive surprise for the past 4 quarters is 1,300%.
Wow.
And
Wow.
earlier this year they announced that they now have more than 100 million Prime subscribers globally, and Prime members, they tend to spend much more on Amazon.com than non-Prime members, and that they get not only free shipping, free 2-day shipping, they also get access to free music, free videos, and with Whole Foods acquisition, they also get free shipping and discounts at Whole Foods. Now, because of AWS's growth, Amazon has been trouncing expectations, but their retail business is also doing pretty well now. Now, many investors wonder how the new SCOTUS ruling is going to.
Yeah, so you and I have talked about that in the past. Now that the Supreme Court has said that consumers have to pay online sales tax, the obvious question at this point, because we haven't seen any, behind-the-scenes implementation yet, is there any way this can cut into Amazon's profits?
Yeah, that's what investors have been wondering, but analysts say that it may not impact Amazon much, because Amazon has already been collecting sales tax on direct sales made by it. They announced sometime last year that they have started collecting sales tax on all direct sales. Now, independent merchants that use the Amazon's platform, they will be required to collect sales tax. So they will come within this ruling now. So that is why we saw that on Thursday when this ruling was announced, Amazon's shares dropped just about 1%, whereas other major online retailers like eBay and Overstock, their shares plunged much more. Now, Amazon shares are up almost 50% this year, and they are not cheap, but investors are paying for growth here.
Well, the stock outperformed its industry over the past year.
Yes.
So.
And in fact, Amazon is now the second most valuable company in the world, just behind Apple. So, but Amazon shares have been rising faster than Apple's shares. So it remains to be seen whether Amazon can beat Apple to become the first $1 trillion company in the world.
Well, and another question, maybe on investors' minds, I'll just throw this out. How ready is it for a split?
Yeah, the shares are just too expensive, so they are about $1,700 now. So a split totally makes sense. Now it depends upon Jeff Bezos whenever he decides.
Yeah, right.
But it may be in the offing.
It's not out of the question.
Yeah, definitely not.
All right. Brian, you're going to talk about that refiner known as Holly Frontier.
Yeah, Holly Frontier is a refiner, as you just said. They recently reported earnings where they absolutely crushed the Zacks consensus earnings and revenue estimates. They saw revenues improve by 34%, and every one of their segments outperformed expectations. Now, this was due to three major factors: an increase in total production, improving margins, and decreasing of total costs. And you can really see this in their oil barrels refined. Total production increased above expectations, and while they're increasing production, their cost per barrel decreased above expectations as well. Now, management commented that they expect positive margins momentum to continue through 2018. But one of the biggest drivers for this refining company was the EIA, the Energy Information Administration, who reports on total U.S. production, recently came out, and they expect the U.S. to produce 11.9 million barrels of oil per day by the end of 2019. Now, we're currently producing about 10.47 million barrels. So this is going to be a 1.4 million barrel increase by the end of the next year. So it's given us a really long-term growth for the company. What really, given all this really positive news, the estimates for the next 2 quarters and the next 2 years have all been positively revised. But I want to show you something really interesting on their detailed estimate page on their estimate revisions.
Okay.
As I said, all the revisions have increased here for the next 2 quarters and the next 2 years. But if you look specifically at 90 days, 60 days, 7 days, every interval here is increasing for the next 2 quarters and the next 2 years. And it's giving us a sustained increase in growth. And it's not like they're going, hey, this is just a one-time deal, it's a great earnings. Every 30 days, the analysts are going, this is even getting even better, especially all the way through 2019. And as you would expect, all this great news has caused the stock price to really appreciate as of late. And if we take a look at their price consensus graph, since the middle of about 2017, when this oil started really kicking in, we have almost a vertical line of the stock price just jumping up here. And as we talked about earlier, the analyst estimates have been increasing year over year. As we can see, this estimate is just going through the roof here, giving us our long-term growth story. At the same time, while we're seeing this great growth in the refining segment, this company pays a 1.85% annual dividend, which is on par with the S&P 500, but it's not growing nearly as much as the refining segment. And the company also has a $150 million remaining in their share repurchase. So we have a really long growth term catalyst with the total production. And at the same time, when they're growing, they're going to pay us a dividend and repurchase their shares.
Interesting. All right, thanks for that. Do either of you own either of these?
No.
I own Amazon in my personal portfolio.
Okay, thanks for declaring, as they say. Don't forget, more stock information on our website, Zacks.com. It's all over there 24/7, just waiting for you to come and look through it. Commentary, stock picks, and a whole lot more. And also, don't overlook the podcast page. People like Nina have interesting podcasts that they do interviews in with a lot of interesting people, so you'll probably want to check that out as well. With Nina and Brian, I'm Terry Ruffalo.